Artificial intelligence looks like it's going to be the defining trend for the next decade, probably. Interest rates are probably done being raised as inflation is going down seriously, which was much to our relief. And the only thing that we face now is they need to raise the debt ceiling and to do it without too much hassle. And that is probably the least certain of the three things I'm going to be talking about. But we need to get into this artificial intelligence trend and plan how we're going to go into it if Congress is wise enough to raise the debt ceiling. Hang on. I am Dr. Stephen Fox. These are my personally selected stocks. This is not financial advice, as I do not know your personal situation. Hey everybody, welcome to my channel. The safest way to invest in artificial intelligence is through the mega caps, because they all are going to have a huge impact on artificial intelligence. Microsoft, in many ways, sort of started the current attention being paid to artificial intelligence when they integrated their Chat GPT into their Bing search browser. Google has long been a favorite of mine. Their search engine has always been the best, and they're working on integrating Bard into their browser. And we expect great things from Google, and I am invested into it. Now, Apple is creating excitement with their mixed reality headset. They're going to be using all kinds of artificial intelligence, and they're going to have a developers conference on June 5th, and they're going to present their mixed reality headset. I think in many ways, Apple has the right idea. I like it better than the idea of the metaverse. The metaverse, to me, has always been the gamers. They do have their own little universe that they're into, right? And so that's really the only practical, full-fledged metaverse that I see. The mixed reality makes more sense to me because I don't think people want to escape from this reality totally. I think what they want is something that makes this reality better, which is the goal of mixed reality.
What are you seeing about the overall desire of people to want to interact in this way?
Well, let's start off by saying that we are in the beginning of the next technological revolution, right? So for the first time, we're seeing a lot of new technologies developing at the same time. We have augmented reality, virtual reality, artificial intelligence, everything coming at the same time, creating new opportunities that we haven't seen before. I mean, Apple, they stand for quality, and they have been working on this headset for many years, obviously. So everyone is, of course, very exciting of what they're going to release.
Yeah.
But what we are seeing from our point of view is the benefits that we're seeing with these technologies are a greater shift, I think, than with the smartphone or the internet.
But what needs to happen? Does the price point need to be more accessible for this really to go mainstream?
Well, I think, right now we are in the business to business where we're seeing the real results, right? If you're using virtual reality for training and education, for example, you can lower your costs with 80%, have a retention of 70%, and you learn 4 times faster than any other training method out there. So, I mean, for this to become more mainstream, we need a headset that is more fashionable, that is a little bit cheaper, and of course, content is king. It has to add value to us. It has to make sense for us to put on a headset instead of using our phones.
And I think that's the point, Emma, is many would feel that actually, until you've tried it, you can't knock it. But the trying of it is going to be the hard thing. How do you get out there, market these products? How do you ensure that everyone can see the benefits?
Well, I think that, to your point, the content is king here. We need to have experiences that really showcases what these technologies can do. Because instead of being on the internet or just looking at the internet, we're going to be inside the internet, using all of our senses and engaging in whole new ways. And I think when we can see content and apps that will really show how these technologies will change our life, then I think it will become much more mainstream. And I think gaming and social media and those areas are really exciting and fun. But the greatest benefit for humanity will be in training, education, and just like the first internet revolutionized these areas, so will Web 3.0 and the metaverse.
Of course, there's lots of hand-wringing about that. There's worries. In the same way you mentioned artificial intelligence, we're worrying about the regulation of that, the safe and ethical use of it. We're worried about people living too much of their lives in a virtual or augmented reality. How are you thinking about that? Because I know over in Sweden there's much thought to this.
Well, I think that we have almost lost the whole generation for a 2D world, right? We missed when we had the smartphones to actually educate people on how to communicate with each other. I see this actually as a window of opportunity where we're leaving this very limited 2D world behind us and entering a more natural state of a 3D world. And I think when we're entering these worlds, we're going to see how we spend our time and how we can use this to feel better and to connect with each other. You are 3.75 times more emotional connected to the content that you can experience. So I think that we can use these technologies to kind of bridge those gaps that we have built.
And Emma, when we first introduced you, we heard of all the companies you've been working with. In the economic environment and realities of it, are companies as willing to venture into this field?
Yes, and I think that what we need to solve are problems that we're facing at the moment. So, I mean, by the year 2025, 50% of everyone on the planet will be needing reskilling or upskilling. So, and the methods that we're using are costly and very time consuming. So companies are looking at new ways to solve problems that we're facing. And I think that if you're a company today within the production line, retail, or those types of areas, you need to have a look at a metaverse strategy.
So Apple's presentation of its mixed reality headset at their developers conference from June 5th to June 10th should be exciting. I think it could be, one of their first major product releases for years. There hasn't really been anything that much new from Apple, and so we're curious to see what it is. They've been kind of putting it off. It still needs a lot more work. But they want to get a working model out there and to start to improve on it. It's probably going to be too expensive at first. I think what the price tag I hear being bandied about is about $3,000. But I think we're over the interest rate hikes, I think. I don't think the Fed is going to raise them anymore because inflation has come down, as shown at Trueflation.com. And wow, would you look at that? Trueflation, which uses many more data sources and is more current, indicates that the current inflation rate is actually 3.04%. Wow. They're not going to be raising interest rates, folks. The deed is already done. We just got to get past this debt ceiling nonsense. Jerome Powell, head of the Federal Reserve Board, is more or less indicating that they are done raising interest rates.
I do think that forward guidance can be useful when policymakers have a materially different or clearer view of the likely path of policy than does the interested public. I would agree at the effective lower bound when we need to provide more stimulus by indicating an intent to keep policy accommodative longer than the public expects. There's a use case there. I also would say, though, that communication comes with a cost of misinterpretation, and it also may limit flexibility. So I think we should use forward guidance sparingly when the course of policy is either reasonably well understood or, on the contrary, is so dependent on uncertain future developments that little really can be said constructively about the future. And a good example of that was the March 2020 FOMC meeting. The pandemic shutdowns were just beginning. The level of certainty was almost unimaginable, and we chose not to issue an SEP at that point. Really, our view was that releasing a forecast at that time might have been more of an obstacle to clear communication than a help. In contrast, as I mentioned a minute ago, forward guidance has really been a useful and effective tool during the current tightening cycle, as financial conditions have tightened well in advance of actual rate increases. You know, the 2-year tightened between the September 21 meeting and liftoff in March of 20. It tightened by 200 basis points before we ever actually lifted rates, and that's significantly because of our communication. So in the current context, until recently, it's been relatively clear that further policy firming would be warranted, and our forward guidance has said so. Now, however, we've come a long way in policy tightening, and the stance of policy is restrictive, and we face uncertainty about the lagged effects of our tightening so far and about the extent of credit tightening from recent banking stresses. So today, our guidance is limited to identifying the factors we'll be monitoring as we assess the extent to which additional policy firming may be appropriate to return inflation to 2% over time. As I noted at the last press conference, that assessment will be an ongoing one as we move ahead, meeting by meeting. Having come this far, we can afford to look at the data and the evolving outlook and make careful assessments.
Please smash the like button if any of this is helpful. So I think we face a definite choice point, and it's all based on the debt ceiling. If they pass it, the market's going to explode upwards. If they do not pass it and it's a big hassle, the market will go down. If they default, it's going to be a disaster, and my cat assures me that's very much the case. So thank you very much for listening, and I'm going to be looking over stocks and building a watch list. I've invested in ON Semiconductor, Google, and Super Microcomputer, and they've been good investments, but it's all up to the debt ceiling at this point. And whether we're going to dive into other stocks, it all depends on what Congress does with that debt ceiling. So I'm going to be developing a watch list, which I'm going to implement if Congress passes the debt ceiling. If they don't pass it, we are doomed for a downturn. I think that's my opinion, and many other people's opinion. So thank you very much for watching, and I hope to see you in the next one.